Hi everyone. Before we get started today, I wanted to share a word with you and a special offer for all of our listeners from our terrific sponsor at 212. Now, if you haven't heard of 212 and you're a startup founder, you need to make sure you don't miss what I'm about to say. At the heart of every business is your cap table. It's how you know who owns what of the business, and not only is it essential to understanding your ownership, but it's also increasingly a legal requirement expected of you by investors and regulators alike. But managing a cap table on an Excel spreadsheet is a nightmare. Trust me, I myself have done it, and it's not something I'm proud of, nor would I do it again, after having raised money from over 2,100 investors via regulation crowdfunding. That's why when it comes to cap table management, I switched over to 212, and I'm not looking back. With their white glove onboarding service included for free, I was up and running with our cap table solution in no time. Now, I should note something really important. Other cap table providers on the market price based on your number of investors, which means when it comes to managing all of your investors, especially from online raises, you can be paying thousands of dollars in yearly fees. And that's what makes 212 far and away the best and most cost-affordable option on the market for startup founders. With 212, you pay one flat fee of $240 a year, regardless of how many investors you have, and you get their full suite of features right out of the box without any hidden fees. One of my favorite features is the ability to see how much you'll get diluted if you take that next check. If you're a founder or an investor, you owe it to yourself to check out the 212 website at 212.co. That's TWO12.co. And get this, they're giving KingsCrowd listeners an additional 25% off your first year membership with discount code KingsCrowd25. Dilution is real, complex, and expensive. For just $20 a month, well, $15 after the discount code, you can sleep easy at night and be ready when your next investor says yes. So hello, everyone, and thank you so much for joining us today on another episode of the KingsCrowd Startup Investor Podcast. Today, we have a very special guest in Dustin Byington, one of the founders of 212. They also happen to be our sponsor. I'm sure you heard right before we started the show today, a little message from our sponsor. We are super excited about 212 and are ourselves customers of their service. So with that, I'm going to kick it off. And Dustin, thank you so much for being here today with us all.
Thanks for having me, Chris. Happy to be here.
Outstanding. So Dustin, would love to kick it off by just getting a little bit more, information about yourself. Who are you and what are you guys up to at 212?
Well, at 212, we really think of ourselves as founders. So we're here to support other founders in their journey, particularly when it comes to all things startup finance. Dilution is real and expensive, and we help at 212 help founders minimize dilution and maximize control with $240 a year cap table management software.
So it's funny, a lot of people who listen maybe don't know what cap table management software is, but it's maybe one of the most integral things that a founder does because you were constantly questioned about it, asked about it. VCs want to know about it, investors want to know about it, employees want to know about it, and it's because it helps people understand what their ownership of the company is. So can you tell us a little bit more about what cap table management is and why it is so important to a company?
Absolutely. So your cap table is sort of the heart and soul of your company. It is a list of beneficial owners. So that includes founders, employees, investors, advisors. And, with traditional brick and mortar companies that kind of like, two people own a company, they go into a partnership together, they each own half of it. You can sort of like keep track of that with a lawyer in a spreadsheet. But with rapidly growing startups that have like dozens, hundreds, and now in crowdfunding, sometimes thousands of participants, all either investing on different terms or vesting on different schedules, the math really can become very complex and sort of ripe for catastrophe. And so now I think a lot of investors are sort of like leaning towards demanding cap table management. We have seen some regulators even pushing, kind of hinting that, they prefer when companies are starting to use some purpose-built software to help ensure that, everything is sort of in order. We know what we own, our investors know what we own, our employees have, get regular updates on how their ownership is unlocking. And this all creates a lot of like safety and security for all involved. And so, bringing transparency to ownership and startup finance is really one of our missions.
Absolutely. And for those who listen to our show, I know a lot of them are investors via platforms like Republic, like WeFunder, like StartEngine, so on and so forth. So when you were becoming an investor on those platforms, if it's common shares, what does that look like? Are they ending up on the cap table? If it's a convertible note or a safe, what does that look like? Are they ending up on the cap table? We'd love to help them understand what it looks like for themselves as they invest in these companies.
Yeah, I think going back, there's been, sometimes people would say things like, okay, I've got a convertible note, I'm not on the cap table. Well, as a founder, if you've got a bunch of convertible notes outstanding, that is going to dramatically impact your ownership over time. And so we take the perspective that, we need to have transparency about all of these financial activities, whether or not they're technically on or off the cap table. And so we consider all these participants to be part of the ecosystem. And, even when you have, in crowdfunding, it's quite common to have special purpose vehicles or custodians where we push all the hundreds or thousands of people, but we're increasingly needing to also keep track of those folks as well. And so our software is purpose built for those kinds of activities and for crowdfund companies.
Special purpose vehicle is a new word for this industry. This year, they made it legal right as of March that you can utilize a special purpose vehicle, which basically allows you to wrap a lot of investors into one vehicle when they're investing together. So one of the things that I personally love about 212 is that when I go to other service providers like a Carta, they're built for the very traditional world where maybe even having 100 investors in a company is a lot. And they'll charge you for each and every one of those line items on your cap table. But in this new world, we have 2,100 investors. And paying line by line for each one of those members could get very, very costly. So talk to us about how you kind of price the product and why that makes this a really terrific solution for folks who are going out and doing raises via the general public markets.
Sure, Chris. Yeah, our pricing is simple, fair, and transparent. It's $240 for every company of any size, crowdfunding or otherwise, whether you have 2 people on your cap table or 2,000.
I don't think people realize quite how important that is. I can tell you I've been quoted well over $10,000 per year for similar tools. Another thing that I know that you provide is 409A valuations. Probably another term that a lot of folks don't know or understand. So can you break that down a little bit for us, what that looks like?
Sure. The 409A is it's simply something that you have to do so the IRS knows how much to tax the people that you're giving options to. And so you're giving people options for services rendered. And so IRS is going to take a piece of that. That's their business model. And so we got to figure out how much you just gave those folks. And so we've got to put a price on those options. And so that's what the 409A is. It's a way for founders to price their options to be compliant with their tax liabilities. And so what we do, we provide a $1,500 bespoke 409A. It's for $1,500 to $2,500. It starts at $1,500 for smaller companies, but it allows companies to be able to very easily generate a 409A with very little human interaction. You just use the software, you click a few buttons, and after you've done it your first time, it actually gets even easier and easier because you do have to issue these every year. And so if you're paying, I've seen quotes $7,000, $8,000, $9,000, $10,000 for 409A. Usually what happens is founders, they don't do them as frequently as they're supposed to, and then they get sort of out of compliance. And so we're really here, we're saying, look, there's a growing number of issues that founders face related to startup finance, and we're sort of like tackling them one at a time and chipping away. And so the end goal is to be this one-stop shop for all things related to startup finance, capital management, valuation. We're even getting into now pro forma generation software.
Got it. And there are a lot of people who probably haven't worked at a startup, so I'll just explain. When it comes to options, when you join a startup, a lot of times what they'll say is, "Hey, each year, here's how much equity you can earn." And basically, you vest your equity, you work for it, and then at the end of the year, you start to get that equity, and now that's your ownership. Oftentimes, you have to pay some sort of price for it when it's an option, so you're buying the shares, but at a very, very low cost. But the 409A valuation, I do want to help people understand that if you look at the valuation the company goes and raises money at, they might say they're worth 10 or $20 million today. Their 409A valuation might say they're worth $1 million or $500,000. And it's because there's very different calculations that are done for 409As where you're really focused on just looking at the key components of the business, not thinking about future state and how you're going to become $1 billion company, but just kind of looking at the assets and whatnot of the business. You're trying to get to the lowest value because you have to pay taxes on that. So anyway, I just want people to know if you ever look at a 409A valuation, it's most likely going to look relatively different from what people are going out to market and raising capital at. Would you say that's a fair assessment?
Oh, dramatically, yes. And usually the thing that drives that most is something called this illiquidity discount. Because hey, Chris, you do some work for me, I give you some options, but you're going to say, hey, yeah, you might have given me these options for the services rendered, but I can't go turn around and sell those options. There's no marketplace for these things. They're speculative in nature. And so what we're able to do, what 409A industry does as best practice is you put these pretty massive illiquidity discounts on it. So usually the numbers are kind of like pennies on the dollar. We do also have a calculator that allows you to sort of get some information on what your preferred valuation would be. So that would be your fundraise valuation. So that is the $20 million cap or the $50 million cap or the $12 million price round. If you're trying to figure out how to price your going out to investors, we can also help you there as well.
That's really cool. And for founders, I'm curious, do you provide the ability to, I don't know, even put in like the emails of different stakeholders so that they can have their own account and see what their ownership levels look like and what their vesting schedules look like and all of those types of things?
Absolutely. Yeah. Everybody on your cap table gets a login and before you invite them, you can actually preview what they're going to see. And they're going to see a small subset of the total cap table that's just relevant to them. And so it allows, that again, back to the theme of transparency. We want to be able to give our investors and our advisors insight into what they own. And then also be able to kind of like look into the future and show them, run some models and some simulations and show them what their options and their investment could be worth in the future.
That's really cool. And one of my other favorite things about this is as you're planning a capital raise as a founder, one of the biggest questions you always get asked is, how much are you diluting my current stakeholders, right? So you have 100% of a company, and then you decide you want to raise money, and you're going to give up some percent of that company. So when you give up that new percent of the company, there's not suddenly 110% of the company. There's still only 100. So you have to make room somehow, and that means that people's equity stake gets diminished or diluted is the typical word that people utilize. You have a tool for that, right? To help understand what dilution will look like for all stakeholders?
Yep, absolutely. And we're able to simulate future rounds of financing. We call these what if simulations. So we say, what if I raise at a $10 million, a priced round at a $10 million valuation? How are my notes going to convert and how much will I get diluted? Then you can run another what if simulation that says, what if we raise instead at 15 million? And so now when you're negotiating with your investor, you can have some sense of, okay, how much is this delta between the terms maybe I'm hoping for and their counter, or how much is that really going to impact our business? And then we get into some pretty advanced stuff too. You can simulate multiple rounds of financing, including exits. And so you could kind of make the case to your investor, okay, if you invest today, maybe you invest in the seed, and then you project what your Series A valuation, and then you think you can get to a quick exit. You can tell that story in a great amount of detail to your investors and convey how much they stand to make. This is also really good with advisors. I see kind of the average industry standard of giving advisors around 1/4 of a point. A lot of advisors have never advised a startup before. That sounds really low to them, but that is industry standard, and maybe you could go as high as a point for somebody that was really, really high value. But you can then show them, hey, okay, here's what the 1/4 point could be worth if we're able to succeed on the vision. So it's a way to motivate and engage folks.
5 or 6 years ago, you couldn't even, I mean, there was no tools for this. You were going into an Excel sheet and you're managing a bunch of names and a bunch of numbers and trying to get the equations to work for you and trying to do any sort of projections. All of that stuff was an absolute disaster. So we're living in a new world when it comes to cap table management, and it really does make a founder's life much easier and answering those questions a lot easier as well. And you're at an attractive price point. I mean, I know, even myself, trying to save money. So I started in an Excel sheet, but that quickly becomes very unwieldy. So being able to get something that's only a couple $100 a month, what, $250 a month?
No, $240 a year.
A year, sorry, $240 a year. It's incredible. Anyone can afford that. It's not, you can make that work no matter how little funding you have. You can find a way to make $240 a year work, and it's going to make your life 100 times easier. Now, I'm curious to hear from you. This is a super interesting problem to solve. At the same time, it's probably not one that everyone wakes up and runs to want to, solve. So what was it that kind of led you to the founding of 212?
I've been a serial entrepreneur, and so I started my career at Goldman Sachs in the middle of financial collapse, and that sort of led me down this path of fintech entrepreneurship. And so I've gotten a lot of respect for the process. It is a really challenging thing to start a company, and so I'm very motivated by what gets me out of bed in the morning is trying to support other founders. And I just saw this as a massive pain point that there's so many things related to this sort of like dark magic of startup finance that founders, you feel like you need a master's degree in. And so trying to figure out ways that we can simplify this, we can give founders education. We do a lot of call-ins, by the way. And we do startup finance education where people call in. It's a new podcast venue by David Sachs. People call in and we, answer questions about, how much to give to an advisor, what to do if you raise too much money, and things like that. So, education is, we build tools to support founders, but we also provide a lot of education. And so if anybody's looking for more of that side of the coin, they can either, we tweet about this stuff a lot at 212.co_co, or they can find us on Call-In. So in fact, we're big on supporting founders in their journeys.
That's terrific. And tell us a little bit more about, you're a startup yourself. You weren't started that long ago. So tell us about where you're at. How big is your team? What are some of your major goals for the next year?
Sure. Yeah, we've been doing this for 3 years, and so the first year we kind of we were working on another sort of adjacent problem related to helping startups generate liquidity for their businesses, and it was actually that sort of we realized we need to settle those transactions somewhere, and then we started looking at cap table and realized there was no open API enabled cap table management solution, and sort of that was our first foray into the space, and we've sort of been running ever since. And we've got we're getting close to our 100th customer, and we are really excited to support the crowdfunding industry in particular, given that I think I just saw you just hit $1 billion in sales. I wouldn't be surprised if we hit 10 billion in sales much faster than people think. So I think the CF industry, with the $5 million cap and the double whammy of being able to market and fundraise at the same time, I think it's the future, and we're excited to support the CF industry.
Yeah, that's right. $1 billion has been raised under CF. I have a feeling the next billion will not take 5 years. It could be as quick as 5 to 7 months. I could see a world where that happens. So for founders who are considering doing an equity crowdfunding raise or have already done one, if you don't have a cap table management solution, I certainly recommend utilizing 212. For folks who are looking, to utilize 212, Dustin, where should they go, and what's the best step to get started?
Sure, it's two12.co, and so there's that you can hop on our website, and lots of good information there. As mentioned, we also have Twitter and LinkedIn. Pretty active on Twitter, two12_12. We've been doing some fun giveaways on there, giving away like tungsten cubes and things like that. And so feel free to come on in, or you can drop us an email. Our email's on our website, and happy to be a resource.
That's really cool. When you're getting started and you're kind of uploading the cap table the first time around, can you kind of do like a CSV upload? How do you help people manage that? How long does the process typically take to kind of get your cap table uploaded that first time around?
It just sort of depends on the size and complexity of your company. It can range from 30 minutes to a few hours. For really complex companies that have lots of different investors and notes, we have a really low cost service that we can help support. So everything we do is focused on being affordable and highly usable. So I've heard some horror stories with other platforms where it's taken like 6 weeks to upload and get up and running. Usually it's for us it's same day or one week in really, really advanced kind of situations.
Yeah, that's amazing. And, I know people think, well, how complex can it get? I mean, you're selling shares, you're giving some shares to people, but there's so many complexities. And, even one of them that I'll mention as a founder is, you have people joining at all different times and they're all getting different amounts of equity when they join. And then they all vest on different schedules. And then what if one of them leaves, then the rest doesn't vest? And where does that go? Things get complicated fast. Things get complicated really, really fast. So don't underestimate how challenging it can become to manage your cap table. It's definitely something that if you get right early on, it's much, much better. Anything you do for, I know a lot of companies when they're starting out, they think going the LLC route is the easiest. I might recommend against that, but if you're thinking about raising capital, but many people do go and do, an LLC, and then you're kind of on the hook for figuring out how to do all your K1s and go through the tax process. Anything helpful on your platform to help manage kind of that K1 process at all?
We don't manage the K1s yet. We have talked to a few folks about that, and we're always hunting for pain points. I was just talking to a lawyer about how they, it's tough getting folks to issue their 83B in under 30 days and storing all that. So, that's one that might be on the horizon. We're a multi-product, multi-service company, so just hunting for startup pain points. We'll keep chipping away at that. But we do support LLCs. We just usually you have the company accountants to issue those.
Sure.
One quick point about your former point about getting started on a cap table early. I think a good analogy is brushing your teeth. So or flossing. Everybody sort of waits until they're in the dentist and they've got a blade in their gums to think, oh man, I really should have been doing this earlier. And cap table is not too different. If you get started early and you kind of just get everything set up correctly, then it just becomes a breeze and it's really easy. And you kind of like have this sort of moment, almost like when you pay off your credit card, we have this like clean cap table moment. And you're like, oh my God, like I've got everything sorted, everything's in the right place, I'm good. And in the back of your mind, because for the longest time, you as a founder, you're like, everything is kind of like a little shaky, a little rocky. So the process of uploading everything in cap table actually sort of can flush out some errors. We have some sanity check stuff in our software that can catch things if there's like, if humans, which, a lot of times lawyers make errors just because they're human. So, writing the wrong price per share or things like that. So, getting access to a cap table, getting started early is just kind of like, getting out of bed and brushing your teeth.
And I can assure you, as soon as you go to do a Reg CF raise, if you haven't already, one of the first things they're going to ask for is you have to give them a cap table, right? That's part of your Form C is knowing who owns more than 25% of the company. All that type of stuff has to be answered. And the way you answer that is utilizing your cap table. So it's very necessary. Then if you're considering going and raising a Reg A plus, having gone through the process, I can tell you that there's a lot of work to be done around the cap table. They want to understand all of your directors and officers, the percents they own before, the percents they own after. And there's all these complex calculations you have to make. And it certainly would make your life a lot easier to have a tool that actually automates a lot of those processes and to make sure you're already cleaned and buttoned up and so you're not running into any issues because managing all of it does get unwieldy. So super interesting. I absolutely love what you're doing, Dustin. You are solving startup pain points for sure. And for those who are thinking about it, who are doing a Reg CF raise, doing a Reg A plus raise, or just in general need to manage your cap table, 212.co. You should go and check them out. It's a great service. I think they make it really user-friendly, very easy. Dustin, thank you so much for your time today. Any parting words?
As a founder, make sure you're ready for that yes. When be ready for investors to say yes, because the first thing they're going to do is ask you for your cap table. So, get prepared and make your life easier later.
Make sure you're ready to say yes, indeed. Dustin, great parting words. Have an awesome day, and thanks for being on the show today.
Thanks so much, Chris. Much appreciated.
Take care.